Hey everybody, Mike Meena at Augusta Financial. Hope you're doing well. People are asking me, hey Mike, what's going on with the market? It seems like it's softening all of a sudden. Why is it softening? What's going on? Are interest rates going to come back down? Let's live with interest rates. Right now we got 51 months under our belt, under 5% in the last 50 plus years. So we're going to just stick with interest rates right in the area that we're in. If we get a little kick and rates drop into the low 4s or the high 3s, that's fantastic. That's wonderful. And the market's going to go absolutely wild again. But what we need to do is we need to keep and remember that these are fantastic interest rates. I don't want to hear anything but these are fantastic interest rates. We can't look at the past or a month ago or 2 months ago or 3 months ago or whatever was happening in May. Okay. The other thing that people want to know is, well, it seems like the real estate market has softened a little. What's the reason that it's softened? Well, it's the knee-jerk reaction, interest rates climbing in May. People didn't care so much in May and June and July about interest rates climbing. But now in August and September, and prices have increased also. So we had that double effect. And when you have a double, thing, people just go, oh my God, I'm going to lease again for another year. Okay, well, that's wonderful. But prices, remember, went up 30%. And then you lost another 20% when interest rates went up. And now what happens? We're 50% higher than we were in November of last year. Yeah, payment-wise, we might be close to that. I don't think we're quite there. But if we did the math, it might look pretty ugly right there. But what's going to continue to happen is prices are going to continue to rise, and if the economy gets better, interest rates are going to continue to rise, and then we're going to have a real big problem because you're still going to be renting and you're still not going to get your tax refund, and you're still going to be paying high, and rent's going to continue to go up $100 or $200 per year. So what do I think at this point? I still think it's a great time to buy. I think if you're an investor, it's a great time to invest. If we looked at investment properties, and this video is getting a little bit long, I know, but if we looked at investment properties, we're going to have to sit there and say, wow, does it still make sense? Yes, it still makes sense. We buy a $350,000 property that we rent for $2,200 a month, and we basically break even, maybe put $100 in our pocket, but we pay $87,000 down on that rental property. Does it make sense? I don't know. If that property goes up just 3% a year, $10,000 a year, and we save $400 in principal that we pay every year, that means we're earning $15,000 on an $87,000 investment. It's about a 17 or 18% off the top of my head profit that you're making every year, assuming just a 3% appreciation. And keep in mind that California's increased over 6% per year for the last 50 plus years. Yes, I do 50, but I'm not quite 50 yet, but I'm pushing it. I'll be there in a couple years. Please call me if you need anything. I really need the business because I want to retire at some point. 661-260-2970. Hope you're having a great day, and we'll talk at you soon. Thanks.